Joining me now is James Demmert. He is the founder and CIO at Main Street Research. James, welcome.
Good to see you again, Ashley.
Good to see you. So markets are officially open for trade. What are you going to be following most closely today during the session?
Well, I think a couple of things. That Challenger report about employment numbers, which was not a good one, more unemployment than we expected. I think that's going to weigh on the market here. You can see it in the futures. And those big Microsoft earnings, right? They came through better than expected on the top and bottom line. But I think investors are worried they're spending too much money going forward on AI. So I think the stock might be weak today.
All right, and you described, speaking of the earnings, you described this week's tech earnings as, quote, show me reports. Alphabet reported yesterday after the bell, Amazon reporting today. What are you seeing?
Well, I think it is the show me period for earnings. And these companies have got to demonstrate that all this investment in AI is coming out the other end in profitability. So we got Amazon after the close. I think that's going to be a very important one. Alphabet last night, those numbers were really fantastic. I don't know why people are selling the stock off. I think our message to investors would be, you want to buy into that weakness with Microsoft. They've been able to really show that they can capitalize on that investment in AI. But it's a big spend going forward. $185 billion is what they're expecting.
Do you think we're in a tech bubble?
I think we're in a healthy tech bubble. And I think that's important for investors to recognize. The bubble's not thin enough to get popped yet. It will get there. I'm pretty convinced. But I think we're still in the early phases of this evolution of the tech bubble, still healthy. And it's sort of, in this case, you're starting to see some companies fall off, some software companies fall off that might not be able to keep up with that AI investment. But you want to stay with those very important companies. Alphabet's one of them.
So the S&P 500 hit 7,000, touched 7,000 recently. I understand that you think it's going to reach 8,000 by the end of 2026. Can you explain more?
Yeah, we're on 8,100, so we're one of the highest on the street. And we think the valuations of the market outside of the Magnificent Seven are very appealing. The average stock is 17 times earnings. And what you're seeing now is the market start to broaden out to those stocks. And we think that's what drives the market to 8,100 with the tailwinds of very strong productivity growth. All this AI technology is causing companies to have better AI productivity growth, and we think better economic growth. So we think at 8,100 is possible.
And do you see anything that as a potential risk to this forecast?
I do. And I think, our team looks at the Fed and says, I think they have to be very careful here. There's a bias towards wanting to cut rates. But with GDP at 4%, productivity growth at 5%, and earnings really great, I think the risk here is the Fed cuts too much, inflation comes back, and the whole market doesn't do so well.
All right. And in your opinion, what are Fed policymakers and investors getting wrong when looking at the labor market?
I think with the labor market, policymakers are concerned that that's a sign the economy is weak. And I think that would be a big mistake. I think instead what's happening, and the Challenger report today suggests this, that we're seeing weakness in the labor market. That report today was a good example. Amazon, UPS, and Dow Chemical were half of the unemployment that came out in that report. And we would suggest AI is seeping into that. You're going to see some employment dispersion from that. And I would suggest that that's not a sign of a weak economy. It's an economy that's kind of rotating to this AI immigration change.
Does the Fed look at this Challenger report?
Oh, I think they look at everything. Yeah, I think they're looking at that for sure.
All right. And what should our viewers know about the current state of foreign markets?
I think that investors, and our message to investors is, this is the first time that we're getting a globally synchronized bull market in everything. So it's not just the AI trade, which it was for the last couple of years. There's great value in the U.S. market outside of AI, and there's great value overseas.
All right. And what are you advising clients to do right now when it comes to portfolio strategy?
I would suggest that investors be really sensitive about broadening their portfolio, not only in companies like Johnson & Johnson in healthcare or Caterpillar in industrials. I know those aren't AI stocks, but that's really what's probably going to drive the market going forward in the U.S. And then get your passport. Don't forget to be a foreign investor in all those great developed countries outside the United States.
All right. Thank you, James Demmert, founder and CIO at Main Street Research, for joining us.
Pleasure.